Accounts from incomplete records. So, for any type of an organization, they first have to find out the profit or loss and also the financial position, because that is the most important aspect for any organization. Okay, so here in this type of incomplete records, these people also will have a separate format wherein they find out the profit or loss based on what they have, like closing capital, opening capital, and if there are any additional capital drawings. Okay, based on this they can easily find out the profit or loss for the of the organization. Okay, and here in this type, no, we will be having some missing figures which we will be finding it out using the formula. And ascertaining profit or loss from incomplete records through the statement of affairs. So here statement of affairs just resembles your balance sheet, wherein in balance sheet we'll be entering the liabilities and assets, right? The same thing will be followed, but here we call it as statement of affairs instead of balance sheet. Okay, so here also again we'll be we'll be comparing the capital at the beginning and capital at the end, and based on that we'll either have the profit or loss. Okay, and the capital in the beginning and capital at the end can be found out by preparing two separate statement of affairs. One is for finding out capital at the beginning, that's your opening capital. The other one again has to be prepared, like statement of affairs has to be prepared for the second time, that's at the end of the year, to find out the closing capital. Okay, and as I said, statement of affairs is just your wherein we'll show the balances of assets and liabilities on a particular date. Okay, and this method of ascertaining profit is also called as statement of affairs or net worth method or capital comparison method. Next, moving on to the calculation of profit or loss through the statement of affairs. So, while by preparing the statement of affairs, how can we calculate the profit or loss? So, here the difference between the closing capital and the opening capital is basically the profit or loss of the business. So, if there are any adjustments like any withdrawals or additional capital, those adjustments also will be included in this while preparing the statement of affairs. Now, how can it be done is we'll take up closing capital as the base. Okay, we'll be doing the reverse calculation. We'll have to like find out if we have to find out the profit or loss, we will take up the closing capital and do the reverse. Okay, so now we first take up the closing capital as the base and drawings will be added to it. Okay, and if there is any additional capital, in that case additional capital is to be subtracted, because when we add the I'm sorry, when we subtract the additional capital, or when the additional capital is being introduced, automatically your closing capital would have been increased, right? And that's the reason we are reducing the amount now. And why are we adding here drawings is, since drawings will reduce the closing capital, we are adding it to it. Since we are doing the reverse calculation, always we do, right, in maths also, when we do reverse calculation, subtractions and all will be added and additions will be subtract. The same thing will be followed here also. Okay, and while doing this, that is closing capital, add drawings minus additional capital, you will get your adjusted closing capital. With this adjusted closing capital, if you deduct your opening capital, you will either get profit or loss. Okay, so here when the difference is in positive figure, that is if you have plus say 5,000, in that case it is profit. If it is negative, for example if it is minus 5,000 when you deduct the opening capital, in that case that is to be considered as loss. And out of these five information, that is closing capital, drawings, additional capital, opening capital, either profit or loss, out of these five information, any one information will be missing, and that is what we have to find out. Okay, these are the kind of sums that we'll have in the beginning. Then we'll see how, what are the steps to be followed to find out the profit or loss by preparing the statement of affairs. You have a format of statement of affairs here. So here these are the five steps that are to be followed. First is we need to ascertain the opening capital by preparing the opening statement of affairs. And the second step is we need to ascertain the closing capital, again by preparing statement of affairs, keeping the balances of the closing balances, and if there are any adjustments, even that are to be shown while preparing closing statement of affairs. Then we need to add the amount of drawings, deduct the additional capital introduced, we'll get the adjusted closing capital. After subtracting your opening capital from the adjusted capital, that is adjusted closing capital, if your adjusting capital is more than opening capital, okay, in that case it denotes profit. If your adjusting capital is lesser than your opening capital, then it denotes loss. Okay, that is what here it is given as five different steps. Okay, so in the format, if you see, you have capital at the end of the year, which is nothing but your closing capital. With that, you have to add up drawings less any additional capital introduced, so you will get your adjusted closing capital. For example, let's take your adjusting capital is rupees 10,000 and your opening capital is rupees 8,000. Okay, so here your adjusting capital is more than your opening capital. When you deduct, you get rupees 2,000, which is your profit. Okay, again, the next example is, if your adjusting capital is say 15,000 and your opening capital is say 10,000, I'm sorry, 15,000, so when your opening capital is say 20,000, okay, in this case your closing capital, adjusted closing capital, is lesser than your opening capital. That is, your adjusted closing capital is 15,000, your opening capital is 20,000. So here in this example, your adjusted closing capital is lesser than your opening capital, so it denotes loss of rupees 5,000.